Michael Saylor has just issued a $50 million Bitcoin warning to all Bitcoin holders, making it clear that time is running out.
Right, the price is going to go up. It's going to get exponentially harder.
Anyone who doesn't buy Bitcoin or participate in the Bitcoin network in the next 12 months will die, not physically, but at least on a financial level.
Well, the ones that have concluded they're going to die in 12 weeks.
Because he was asked if MicroStrategy has an upper limit on how much Bitcoin they will buy. Michael Saylor says, no, there is no such limit. We will acquire up to 10% and more of the Bitcoin network. Then Bitcoin will be over $50 million.
Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but
at the same time, he talks about how the whole world is chronically ill. And only Bitcoin can be the healing and helping elixir here. And the most shocking thing is, he even talks about a potential FTX 2.0 collapse. That could happen here. We will also look into that. So, Michael Saylor actually has not just one warning, but several warnings here. And I also have to give you a warning, because today's video is irresponsible. That means all bear markets should be turned off immediately. And Michael Saylor also addresses all the FUD that always comes up, like MicroStrategy has too many Bitcoins. He also answers this question. But first, let's take a look at whether MicroStrategy will buy Bitcoin without limits.
Is there a ceiling that MicroStrategy has in mind in terms of how much Bitcoin it can hold? Or, is it kind of unlimited and really depends on what is happening in the market?
no, we'll just keep buying. Right, the price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And
so that's what I meant when he says the price will naturally rise exponentially. They continue to buy here. And that, of course, means that it will become increasingly difficult for you to get in. Of course, FOMO, on the other hand, is not a good advisor either. But there's simply the issue that big players are basically buying up the supply here. BlackRock and so on. They're all just taking the Bitcoin away. And Michael Saylor is doing the same with strategy.
yeah, at some point, if we get to 5% of the supply, Bitcoin's probably going to be $1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin. And then we'll be, if I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth. So, our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. And I think everybody's winning if we do that. We seem to strive for our goals.
And there's massive leverage here, with potential for significant impact and benefits. And I think everyone involved wins if we proceed with this strategy. 10%. Strategy. Deal. Clearly, Michael Saylor, that will be the goal here then. Bitcoin will be at 50 million here. And now there are all the critics who say, centralization, blah, blah, blah. Michael Saylor, the response to that is that it's a win-win story because everyone will then have massively more wealth. I mean, imagine that if Bitcoin stands at $50 million here. It's obviously very, very massive. I also don't know in what time frame this will happen. But in any case, he says, no, this is not a bad thing for the Bitcoin network, but rather something very, very positive. I mean, I'm a bit divided here. You have to look at it somewhat critically. But it must be clearly stated that Michael Saylor is not a player I would compare to BlackRock or something like that, or so. And additionally, even if BlackRock or Michael Saylor have 10% of the Bitcoin network, they still won't be able to change the rules. Change them. Additionally, I can hardly imagine that strategy can really accumulate 10% of the Bitcoin network. That would mean if Michael Saylor manages to acquire 10% of the Bitcoin network, that Bitcoin adoption is progressing very, very slowly. Because if he just keeps buying at this pace, who knows, maybe in 10 years, 10% of the Bitcoin network. But if it goes up much, much faster and the price rises much, much quicker, let's say we're somehow at 1 million or something in 2 or 3 years, then Michael Saylor can't acquire 10% of the Bitcoin network anymore, because the price is just rising too fast, too high. The next part is even more important. Here he makes a comparison with type 1 diabetes patients, saying the whole world, they are like chronically ill people, and issues a massive warning.
Why does the Bitcoin standard matter?
Yeah, well, you could summarize it as every company in the world is like a type 1 diabetic. That is, they're unable to store economic energy, or their capital is toxic to them. They're actually suffering from toxic shock. So the world consists of, right now, of 2 capital assets you could use. You either use short-dated treasuries, and they're going to yield 2 to 3% after tax, or you use Bitcoin, which is yielding 50% plus and the cost of capital is 12%, anywhere from 10 to 15% over the long term. But so if your capital asset gives you 2% and the cost of capital is 12%, that means that 10% of your capital value gets drained out of you every year. In essence, every company is losing 10% of their treasury a year in real value by using short-dated treasuries.
So he's talking here about a very, very big problem, the halt. Especially companies have this. So private individuals honestly don't have this. One, must say, because companies are sometimes forced here, they are not allowed to invest in all kinds of assets. They mainly go into treasuries, into short-term government bonds. And then he says it yields a few percent, returns of 1, 2, 3% or something like that. The problem is, he says here, the cost of capital is 10%. And by cost of capital, he means inflation. And if you then somehow get 2% out or, sometimes the cost of capital is higher than 10%, 12, 13, 14%. And if he sets asset price inflation at over 10%, then you end up with a net loss. A losing deal, even if you somehow get 2, 3% from short-term government bonds or something like T-bills. And that's the big problem. And that's why he simply says, hey, it's like everyone worldwide having diabetes. But Bitcoin could be the antidote here. That means you basically have to lose here, unless you play the Bitcoin game. That's the only way you can avoid losing here and not continuously getting sicker and poorer.
It's against regs. It's illegal for a company to capitalize on a security. And so the general solution would be you ought to buy the S&P index, but they can't buy the S&P index. So every company that generates cash flow right now is left with this awful choice. I either have to dividend the capital back to the shareholders, I have to buy my stock back, which is surrender the capital, or I have to go and do a acquisition with the capital, and 95% of the acquisitions are dilutive mergers or disastrous mergers.
Says, as a normal company, you have 3 options. Either you pay out dividends, but you only pay out dividends if you have nothing better to do with your money. Second option, you buy back shares, but you only do that if you have nothing better to do with your money. The third option would be to buy assets that are dilute, that are broken, that are sick, and so on. That means the only option that makes sense here is to buy Bitcoin. Only in this way can a company or institution essentially heal itself. And it's quite a massive story how Bitcoin could be the antidote, so to speak, for the sick capital world we have.
Like, I hate to be, what is the word, dramatic, but I actually think you need to get to the point where you believe that it's hopeless to continue along the present path. And it's like asking the question, what's the characteristic of people that embrace a new cancer therapy? Well, the ones that have concluded they're going to die in 12 weeks if they don't.
So that's obviously extremely intense. He says, if you don't adopt Bitcoin here, then you will die here in the next 12 months. He probably didn't mean it quite like that, but he definitely says, hey, people who don't participate in the therapy, in the cancer therapy, but have cancer here, will simply die. And people who don't settle on Bitcoin here, who don't switch to Bitcoin here, who go the conventional ways, they will also die here. Not physically, but financially die. And that's a really intense warning here.
So if you've got a zombie company, or you have a company if you're competing head to head with a big tech monopoly or any kind of monopoly, when would you discover Bitcoin? You run a yoga studio and the government shuts down yoga studios for the next 4 years everywhere in the world, and your revenue goes to zero. Then you might discover Bitcoin, right? If the government shuts down your business with a law, with a regulation, or when a monopoly forms that makes it impossible for you to compete, then you've got nothing to lose, everything to gain. You're already going to zero. So I think those are the people that embrace this, those that realize that they don't have a future unless they embrace a new idea.
Even back then, in 2008 during the financial crisis, Bitcoin was born. Michael Saylor says nothing different. People who have a problem, people who are being pulled out, excluded from the financial system, excluded from the banking system, who might be facing massive inflation, and so on. Such people turn to Bitcoin. And these are simply the pioneers. That means you need to know. And this is a very, very interesting, not just a theory, you can also see it in practice, that people with a problem are more willing to adopt Bitcoin. If things are still going somewhat well then you just don't look for solutions. You often only go to the doctor when it's too late. When you somehow can't walk anymore, then you go to the doctor. And it's the same with Bitcoin. And now let's take a look at the last warning take from Michael Saylor, where he actually talks about an FTX 2.0 moment. So, it was the big exchange back then that exploded in the last bear market. And where many people assumed that because FTX issued paper Bitcoin here, the last parabolic bull run increase in the last bull market didn't happen. And accordingly, with the collapse of FTX, the bear market was really fueled again.
And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are, they may not be securities, but they're definitely tokens. And as tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle and lots of people are going to die and it's going to be a catastrophe and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage, and what I'm doing is not an intelligent or a brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect, right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna, or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe.
So this is really a very, very important statement that you're making here, because many people see Michael Saylor and think, yeah, okay, he's doing Bitcoin and leveraging it. And now I just do the same thing. Take some shitcoin or something, some gamble token or something, and just throw in a massive leverage like Michael Saylor, and then I can get rich very, very quickly. That's what a lot of people think. But now Michael Saylor is saying, no, keep your hands off that. If you're leveraging, then only with Bitcoin. And even there I would also say, hey, definitely be careful with leverage. Mike Saylor is already playing at the extreme. And I wouldn't necessarily recommend that to a private investor or something. So it's definitely a risky move that Mike Saylor is making. You have to honestly admit that. In any case, if you're bullish on Bitcoin now, then I'll put a link in for you. 21 Bitcoin, how you can buy Bitcoin easily, safely, and simply. With the code Bitcoin, you can get up to 20% off fees when buying Bitcoin. Definitely check it out. It's super easy, super simple. Absolutely recommended. Guys, see you. Peace out.